Hey everyone, welcome to another market review. This week things went pretty much as expected. We closed on the week slightly lower, like minus 0.57, and the expectation is that we go sideways, and we went sideways. Still kind of in the range, we can still go either way, like look at the lower time frame and we have like a broadening formation, which is the standard formation in which price is undecided, doesn't know what to do, and just swings wildly higher or lower uh, until it finally breaks out. And we are at the bottom of the range. Obviously, the risk, because we are at the bottom of the range, the risk is obviously to the downside. If we do a downside breakdown, we should double this. So something like 668. I don't know. My expectation is still that we go a bit lower to 660. And being at the bottom of the range, this is kind of confirmed. Aside from that, we had yields kind of blowing up. Surprisingly, it went down before the Fed day, but what it actually did was confirm the breakout. Like we had a deep pivot candle and bounce. We have a back test of, let's do the 10-year. We basically have a back test of the breakout point and bounce on it and go higher. So this just like a confirmed breakout for yields, together with the pullback and the retest of the ribbon. Then we have, what was that? Crypto, this looks like a bear flag, like we are consolidating under the trend line range. We haven't even gone within it too much. We tried to go into the ribbon. I mean, we did go into the ribbon, but getting rejected. And this looks like a rising wedge, and it's a classic bear pennant or bear wedge. Basically, we went down, now making a wedge. It looks kind of imminent that we break down and do a retest of the lows. Oil didn't really do that well, like it's at the lows as well, in spite of the risk of Venezuela thing blowing up. And DXI, nothing really interesting. But yields, crypto, and the market itself, in that yesterday we kind of had a tech scare. We had Oracle earnings, we have Broadcom earnings that didn't really go that well. So basically, yesterday, what dragged us down, as you can see, there's a lot of green here, but what dragged us down was tech and semis particularly. Oracle as well, Palantir as well. So things look kind of dicey, and I think we will continue the pullback. But this being said, things are also looking pretty good. Like for example, we made a significant recovery in breadth, and let me switch here to breadth mode. Like for example here, yesterday, even if we dropped, we didn't really go down on this. This is the two moving averages of the 20-day of stocks above 20-day moving average. This was okay, like we pull back. We have new highs in advancing stocks. Yesterday, again, despite of being down almost 1% on SPY and even more on Qs, 242, sorry. We were only 60% down volume, and you can see this here because a lot of green. So things are looking quite decent. Uh, I think the last piece of the bullish puzzle is actually the pullback. Like we need to do another retest of the weekly, change to weekly. So we need to do another retest of this weekly EMA, 21 EMA. And if we do, then we are set up for a very, very nice bullish move to the upside. Like a major breakout, maybe go to 650 sometime, maybe March, April, May, something like this. We should be getting to 650. Sorry, 750. 750. But we need another swing down. We need another move down and to find buyers. If we do find buyers, I think the next attempt to go higher will be a breakout. So 700 buy uh, for the center rally. And aside from that, overall bullish for the longer term and go to like 750 sometimes in Q1, early Q2, something like that. So that's kind of the whole setup. Nothing really much to talk about aside from this. So short recap, broadening formation here. Let's go to SPY. Broadening formation here, we are at the lows. If we get a breakdown, we should get acceleration down. My target is this 660, 665 area. Uh, if we bounce sooner, it's more bullish actually. Like it shows that buyers were found quicker. So there's this scenario, like we go lower and we bounce on the backtest of this trend line. This will still be bullish. It's pretty bad that we did not get the 21 EMA tag, but whatever, maybe we get it in January or maybe like sometimes a bit later. This would be ideal. Go to this area here, 660, and then bounce and go higher. As to the timing, I kind of expect because we have OPEX week and we have this time we have expiration on the 17th because it's the third Wednesday of the month. I would expect we remain weak until Wednesday at the minimum. Like it can happen that we remain weak the entire week, but the bare minimum would be Wednesday. Uh, if we continue down, obviously we have a breakdown, so these things can accelerate quickly. Like in a 1 or 2 days, we can get to the target, and then we bounce, and all from here all the way to the second, we should have clear skies and nothing but green once we get a bounce, if we get a bounce. So this is the entire setup. Hopefully it helps. Have a good one. Bye bye.